Chris from Serene Education with the 4 Majors News update for the 17th of June 2013. Hi folks, hope you had a fantastic weekend with family and friends. We're looking at the 4 Majors this morning, starting with Euro against US dollar using our FX8 templates indicator. There's the box on the bottom right hand corner here. Let's get an idea of what happened last week and what we can expect this week potentially. Just change the candlesticks. What can we see? So upside recently, past couple of months, since May of this year, we've seen a nice upside movement for the Euro against US dollar. Quite a strong move to the upside. And if I just draw a trend over here, you can see the aggressiveness in this move. Very short pullbacks. The most important one we've seen recently is the break above this major support and resistance level February tracement here in the shape of the 38.2, which is our monthly February tracement, which also constituted to a major resistance level recently. Broke above it, subsequently moving into these price support and resistance levels high for my February tracement, my daily chart, from the highs we saw in January to the lows we've seen just recently in March. And we saw a slight consolidation, then a punch high again, and then rallying to the next February level, which was 61.8. And now you can see prices come unstuck over here. A lot of indecision candles. Past 2 days in particular, through Wednesday, right through to close of play on Friday. This evening on the Asian session, we've seen a pullback occurring. It's all taking place at the 61.8 February tracement level. Looking at the indicator box here, you can see these R squared, which is important for true sentiment. That is all blue, and you can see there's negativity intraday. That's consolidating at the moment now with the price. However, you can see the long-term sentiment, including the daily, is still very much positive to the upside. But we want to see a nice bullish engulfing candle and something to close above the 61.8 to concur with that. The longer we go, you can see quite clearly prior resistance levels here. So we could see consolidation at this level, and it sure looks like we're seeing that the start of this morning. RMO is clearly above the zero line, which is positive for trend, and the MACD is complementing it. However, you can see just recently as we've been heading into this area here, you can see the MACD is dark green, confirming that we're seeing slight consolidation on price action. So as it stands at the moment now, intraday, so going to my 4-hour chart, you can see that consolidation range, and we'll just move that away so it doesn't get in the way. There we go. You can see the true swing high, swing high, swing high, swing high, swing high, swing high, break. So now we're making any higher highs anymore. We want to make sure that we're actually trading above the current high. So we would need to now, just put a nice white. Let's stick it in. We would need to see price trading and closing higher than this consolidation higher, which also concurs with the 61.8 intraday. So ideally on my 4-hour chart, I'd like to see if this is to be still remain positive. You can see the candles are still very much blue. RMO is well above the zero line. We are seeing consolidation as price has been moving or attempting higher highs. RMO has consolidated, and hence the reason why prices on the RMO have dropped. MACD is very well below the zero. As you can quite clearly see, we are consolidating. What you can see right now is we had a consolidation range last week in particular. So price is trading within that consolidative range. So if we want to see any further movement higher or lower, we would need to see a break of either side of this. So I'm going to, on my 4-hour time frame, what I've done is I've set in a trigger alert to the upside and a trigger alert to the downside, being very well aware that we're still very much trading in a positive trend. So I would like to see a break to the upside. Failure to see a break to the upside and close higher than the 61.8 would indicate we should be looking back towards the 50% February tracement area, which is below us, and get a clean break below that, then ideally our target is in the area, or roughly in the area of 75 pips. Then break below that, we target back down towards a major monthly 38.2 February tracement area, which is a very strong consolidation range because we have our 38 from our weekly also complementing that. So as it stands now, price is trading within a range. Don't see any movement within the range. Not going to really get any pips. So I'd rather wait for a break and close higher on either side to confirm that, and then we'll trade the outcome. On to sterling. Let's have a look here. Notice we'll fall through the start of this year and then bottoming out here at the 1480 mark, which complemented with the price support breakout of this major support and resistance level here at 15300, which was our 2010 support and resistance. You can quite clearly see how price has actually consolidated in this area each time she's moved into it. So selling into it and bouncing, selling into it, bouncing, selling into it, break. So the sentiment was quite sharp to the downside. All the negative news we came out with sterling, potential excuse me, triple dip recession figures, etc. That didn't really phase out, and we saw price revert to the upside. Now you can see that price is fallen below, but now again back up above these levels. And what we're seeing is we've taken the high that we saw. You can see quite clearly a resistance level high here above. We've taken the highs that we saw in January to the current lows we saw in the start of March of this year, and we plotted our February tracements. The major one being the 23.6 here, which is our monthly one, but these smaller ones with the 23, the 38, the 50, you can see price has been using these quite successfully. As I'll just move in just so I can show you. Hit targets, break targets, and then you can see recently here in particular, we've not only broken the 50% Fibonacci retracement of the high in Jan to the low in the start of March, but we've also broken above the institutional moving average. We haven't been above this area since the start of January, going through to 2012 in particular. So a very, very strong indication that prices wanting to go higher. You can see as we've broken the 50%, prices rallied into the 61.8. Just get a little closer. You can see that. You can see prices starting to come unstuck now. It's above the institution, which is a very strong indication. Look at the RMO and the moving average here. Very much complement each other. And the long-term sentiment is still very negative. But however, our shorter-term ones, price is very much in favor upside. So as long as it maintains above the 50% line here, the 15.5576, then ultimately you can see this will still be in a very positive trend. Broken the prior high. So it's swinging higher, which is good. So consolidation at the moment now. So how much consolidation are we likely to see? Well, as long as 50% Fibonacci retracement remains below and the institution remains below price, that's going to be our support. So if we move to our 4-hour time frame, excuse me, you can see price is pretty much stagnant. It broke slightly higher 20 hours ago, and you can see we had a prior consolidation resistance here on the 4-hour. It's trying its hardest to move higher, but we've got the 61.8 at the top of the month. But you can see the RMO, what's happened on the RMO is price is slightly consolidative. MACD, in this move over here, you can see there seems to be more red on the MACD than positiveness. So that's genuine because it's confirming. See these tunes that we do this, for example, you can quite clearly see that high and that current high here. You can see that's moving still higher, but the MACD's clearly moved lower. So what we want to see ultimately is for price to continue making higher highs. You've got to be swinging high in order to see price actually moving in a positive uptrend. Swing high, swing high, swing high, swing high, swing high, swing high. Not breaking the 50% fib here and the 50% moving average, 50 period moving average, apologies. So not swinging lower. What we want to see, if that's a genuine consolidative range now, and this is to be a genuine top, we want to see price making lower swings. What we need to see, if this is still to remain positive, is to see the 61.8 being broken as soon as possible. On the 4-hour chart, you can quite clearly see that we've had a lot of consolidation here. As we saw in the Euro intraday, there seems to be a lot of hesitation, moving higher, a lot of resistance here. We've seen a slight breakout, but no real sentiment with that breakout. Just moving here, you can see that candle, very indecisive, a real doji, and we've seen bearishness coming through on the last 4 hours of this particular pair. So as long as it maintains between this range over here, between the 50, stays above the 50 in particular, then there's always going to be an opportunity for this still to be positive. What we want to see now is a genuine break above the 61.8. The longer it takes to break above 61.8, the more likely it's going to be a major resistance long term, and we see a major resistance, then the ultimate outcome is going to be that price is going to fall back a lot further, a lot greater. So failure to get above 61.8, we should see price moving back towards the 50% line, get a break below that, then we'll look towards the 38.2, which is back to our institution, back towards the 23.6, which is our monthly resistance level, get below that one, and sure enough. So what we want to see now clearly is that this to be positive. We want to see the 61.8 area being broken as soon as possible. Failure to do so, then we should be looking downside. Onto the US dollar Swiss franc. A lot of negativity playing through on this particular pair, and prices have come unstuck. And you can quite clearly see we've actually seen price falling from the highs recently. A lot of highs up here, bearish engulfing candles, and we call these tweezer tops, and prices reverted to the downside. So as it stands at the moment now, you can see prices trading below the institution moving average. All the moving averages below above price were actually in resistance, and you can see we've clearly broken through a consolidative range just recently. Very tentative. Price is moving sideways, not much moving to the downside. We had a hammer top candle formation. However, we never saw any price moving higher because of this consolidated range here, and that's in the shape of the 23.6. So as long as it maintains below 23.6, the RMO is still below the zero. MACD is clearly below the zero, but you can see consolidated nonetheless. So pulling back towards the zero line. As long as it maintains below this fib on the weekly retracement here at 23.6, then we should see prior support becoming a new resistance. If this is still genuinely negative, we want to see lower swings, and the highs need to be lower than the prior one. So you can see that swing low, swing low, swing low. Depicts downside movement. We've come from higher highs, and we're moving lower. So this should be looking for negative sentiment. You can see our intraday RMO and our moving average are very much positive, and prices being consolidated. But the long-term sentiment of the RMO and the moving average institution here are very much working together. So we know the long-term sentiment is negative, and we should be trading for that. So intraday, as long as the 23.6 Fib retracement area remains above price, that's going to be our ceiling level. See, price support becomes new resistance. Swing lows, swing lows, swing lows depict downside movement. We're only seeing swing lows, swing lows, swing lows, swing lows, swing lows. If price still wants to move higher and it breaks above this 23.6, we're breaking this downtrend, which is going to be looking then for upside favoritism, because this is a very strong consolidation. If price is trading above it, that means there's a change in market sentiment. RMO, however, on a 4-hour, even though it is consolidative, it's still below the zero line. We would need to see the RMO jump above the zero line to be true trend upside favorite. MACD is above the zero line, so it's confirming that we are seeing consolidation there. So as it stands at the moment now, the euro and the Swiss franc are pretty much the same, trading within a range. Okay, the 23.6 above price here on the 4-hour, and we've also got a support here at the bottom. So look to see if we get any bearish engulfing candles here or bullish engulfing candles. Ideally on a 4-hour, I'd like to see either or. A nice bearish engulfing candle will confirm that price is going to move back down to a price support and resistance level, or a bullish engulfing candle break would confirm that this intraday and for the foreseeable future we're looking at potential further buying sentiment coming through. This becomes a strong support, and then what we do is we look back towards a 50% retracement over here, which is going to, within range with our 50 period moving average, get above that, then we should look at topside for the foreseeable future. So here again, like its European counterpart, trading within a range, want to see a break higher or break lower to confirm where the sentiment lies. Last pair of the day, the US dollar, Japanese yen, a lot of upside recently. Noticeably, you can see since the 2012, you see the RMO very much above the zero line. However, recently, a lot of selling coming through the US dollar against the yen, and you can see the RMO is clearly trading below the zero line. MACD is very much seeing a lot of negativity on that, and you can see how steep or very quick this aggressive this pullback has been. Trading below the 50%, which were clearly constituted to a major resistance level recently. Resistance, breakout, continuation up to these levels here, and then price just failed. No more sentiment to the upside. There was just no more oomph in this particular pair, and subsequently what happened was we had a bearish engulfing candle, tweezer top, and we had a nice confirmation of that, and then price reverted back towards the price support and resistance level. So we thought, well, breakout, pullback, and then the continuation. That's what happens 90% of the time. So we had the pullback, and then we saw price consolidating over a number of days here. However, when we wanted to see the bullish engulfing candle confirming the continuation, that failed to stack up as we got a bearish engulfing candle. That cancelled all this potential for support here, and it told us straight away that sentiment was still looking to the downside. And we saw a lot of selling into our weekly Fib retracement areas here, which was the current consolidation area, until selling into that quite aggressive, then a major pullback, and then the continuation. And now, as you can quite clearly see, we've had 3 or 4 days of consolidation at the 38.2, which is our price support and resistance level now. And you can see the 38.2 below us. So this tells us straight away, because these lines are quite close together, it's telling us that this over here is a very strong consolidative range. So you've got to be aware of it. The institution is not too far off at the same time. So if you look at the actual box, the indicator box here, there's more blue than red. And you can see there's a lot of buying sentiments on our RMO in particular. And on moving average, we're seeing a bit of negativity here. However, R squared intraday is complementing that buying sentiment, and you can see the price is moving higher. So on a 4-hour chart, you can quite clearly see support. The longer it takes to break that support at the 38.2, the more likelihood you're going to start seeing buying coming through. RMO, you can see a slight, using the wrong indicator. Bear with me for a moment while I just clear this out of here. Okay, use the right indicator now. We got trend. You can see RMO making higher highs. Okay, so it's telling me that the sentiment is going to move up on a price support and resistance. MACD is clearly above the zero. Got to be well aware of that. However, this is to be a true buying opportunity. Ideally, on our 4-hour, we want to see swing highs. Okay, we want to see higher highs. If making lower lows is still negative. Swing low, swing low, swing low, swing low, swing low. If it's still swinging low, we want to. If this is to be genuine swing high, we would need to see this area over here being breached. Price support, this one over here being clearly broken. If we break above that and close above that, then we're seeing genuine major support at the bottom here, and then what we should be looking at is potentially back towards the 23.6 to start with, is our first target. So if you get a nice close above that, from this area to here, you're looking at 134 pips. But ideally back up to these levels here, which is the 50% line, which is a very, very good 412 pips away. So a lot of sentiment to the upside if and when price breaks and closes lower or higher than these levels. Ideally, because we're still looking at negativity, we want to see price closing lower than the 38.2, get below that, and we should be targeting the 23.6, which is down the bottom. However, there are target levels in between these areas, so very, very important. It's far better to wait for price to confirm. At the moment, I was seeing support in a negative trend, so rather wait, be patient, get a confirmed trading signal, break higher or lower, and then we pull the trigger. That's it, guys. Short and sweet, to the point. And if you are using this particular template, please back it up with sound money management rules. I'll keep referring to that. Very important that you trade with sound money management rules. Otherwise, your template's void. Very, very, very important that you stick to money management rules. Other than that, look at the if you're using this particular template, use the actual indicators. Use and be well aware of how to trade it using the indicator bars. Keep it simple. Always be aware of your major support and resistance levels. Trade towards them. Use them as target areas. You'll be surprised how they actually complement your trading style. Other than that, I'll see you first thing tomorrow morning. Until then, you guys trade serenely.